Misclassifying a worker as a contractor when they should be an employee is one of the most expensive mistakes that a small business can make. And it's also one of the easiest mistakes to make by accident. It feels much simpler in the moment, but the cleanup can hit you with back taxes, payroll penalties, unemployment claims, workers' compensation issues, and even legal trouble. So today, we're going to walk through the key differences between employees and contractors so that you know how to classify correctly before you ever cut a check. Hello, C-Squared Collective, and welcome back to our series, Payroll in Bloom, Growing Your Team with Confidence. Our goal is to help you build strong payroll systems from the ground up so that you can support your team, stay compliant, and avoid the common mistakes that cost business owners time and money, all while using QuickBooks Online to keep everything running smoothly. Now, we are accountants, not an HR firm, so think of this as your practical guide to what we see every day working with small businesses just like yours. Be sure to confirm the details of your organization with your state and local requirements, or speak to an HR representative for more specific guidance to your unique company. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips on the topic at hand. And if you'd like to dive deeper, the full series, as well as some of our other series, are linked in the description below. As always, if you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net. So grab your beverage. Today I have a white chocolate mocha, and let's get started. Let's begin with the basic difference. An employee works for your business as part of your team. You typically control what they do, when they do it, how they do it, what tools they use, and what processes they follow. You pay them through payroll, you withhold taxes on their behalf, and at the year end, you issue them a W-2. Now, independent contractors, on the other hand, is in business for themselves. You hire them to deliver a specific result or service, but they decide how the work gets done. They often bring their own tools, set their own pricing, run their own systems, and serve other clients alongside you. At year end, you may need to issue them a 1099 NEC if they meet the IRS reporting thresholds. Here's the most important thing to remember. Classification is not based on what you call them. Simply calling someone a contractor does not make them one. Receiving invoices does not make them a contractor. Planning to issue a 1099 does not make them a contractor. Even a written agreement labeling somebody as an independent contractor is not determinative. What matters is the actual nature of the working relationship. Federal agencies, including the IRS and Department of Labor, look at the facts. They want to know how the work relationship actually functions. A helpful way to think about this is through a few key areas: control, schedule, tools, training, and independence. First, let's take a look at control. If your business controls what work needs to be done and how the work is performed, that is an employee. For example, if you tell someone exactly what processes to follow, what software to use, how to communicate with clients, when to complete each task, and how to represent your company, they are functioning more like an employee. A contractor, on the other hand, is usually hired for a specific outcome. You may tell them the result you need, the deadline, and the project expectations, but they decide how and when to complete the work. For example, if you hire a web designer to build a landing page, you can give them brand colors, copy, and a deadline, but they use their own processes, their own software, their own schedule, and their own expertise to deliver a finished product. That is more of a contract work. Next, let's look at schedule. Employees are often expected to work the schedule set by the business. They may have regular hours, recurring shifts, or required availability. Contractors usually have more control over their own time. You may agree on a due date or a project timeline, but they're not usually managed like staff members hour by hour. This does not mean that contractors have no expectations. Deadlines, meetings, and communication standards are very normal. But if you are managing the person's daily work, assigning hours, and treating them like part of your staff schedule, that's a red flag. Now let's take a look at tools and equipment. If your business provides the computer, software, supplies, uniform, workspace, equipment, and the systems needed to do the job, that points more towards employee status. But if the worker is using their own tools, pays for their own software, covers their own business expenses, and operates independently, that points towards contractor status. Now, no single detail decides the answer by itself. An employee might use their own phone for the job. A contractor might need access to your QuickBooks file or a project management tool. You need to take a look at the whole picture. Another important factor is training. Are you training them on your exact procedures, your scripts, your standards, and your step-by-step procedures? That's more employee. Contractors come with their own expertise. You hire them because they already know how to do the work. You might share project details or brand guidelines, but you're not bringing them up to speed like a new team member. Finally, let's consider independence. An employee is economically tied to your business. You have paid wages, they're working within your systems, and part of your daily operations. A contractor should look like someone who's running their own business. Multiple clients, their own advertising, their own pricing, the ability to choose what work they accept, and the chance to make a profit or take loss. One last thing to note, when the facts are mixed, the IRS tends to default to employee because that's a classification that protects the worker. So if you're on the fence, that's worth knowing before you decide how to pay someone. Now, this is where W-2s and 1099s come in, but the form follows the classification, not the other way around. Employees receive W-2s. Their wages go through payroll. The business withholds federal income tax and handles payroll taxes. Depending on your state and situation, the business may also need to handle unemployment insurance, workers' compensation, paid leave, new hire reporting, and other employment requirements. Now, contractors may receive a 1099 NEC if you pay them $2,000 or more in 2026 for their services and they meet the reporting rules. They are responsible for their own income taxes and self-employment taxes. You don't withhold anything on their behalf. Here's a key point to land on. You don't make someone a contractor by issuing them a 1099. You first determine whether the relationship actually fits contractor status, and then you report it correctly. The form is the last step, not the first. Now, misclassification can create some real problems. If someone should have been treated like an employee, your business may be on the hook for unpaid payroll taxes, penalties, interest, unemployment issues, workers' compensation gaps, overtime, and other wage and hour violations. So this isn't just a bookkeeping preference from us. This affects payroll, taxes, compliance, and your responsibility as a business owner. One more thing to note, state rules can be stricter than federal rules. Some states use tougher tests for who counts as an employee. If you have remote workers or workers in multiple states or contractors helping from different locations, make sure to look at the rules where the work is actually performed, not just where your business is based. So before you pay someone as a contractor, let's pause and run through some of these questions. Are we controlling how they do the work? Are we setting their schedule? Are we providing the tools and the systems? Are we training them like staff? Are they part of our regular business operations? Do they truly have their own business? Do they work for other clients? Are we paying for results, or are we filling ongoing roles? If the person looks, works, and functions like part of your team, they probably need to be treated like an employee. The main takeaway is this: employee versus contract classification is not about preference, convenience, or avoiding payroll. It is about the actual working relationship. When you classify correctly from the start, your payroll setup is cleaner, your tax reporting is stronger, and your business is better protected as you grow. Now, thank you so much for watching today. If you walked away with even just one thing that you can act on, that is exactly what we are here for. If this was helpful, give us a like, drop a comment, and subscribe so you don't miss what's coming next. And if you know another business owner who's been wrestling with payroll, send this their way. We all need someone in our corner. Now, there's more where this came from. Be sure to check out the rest of the Payroll and Bloom series or browse our other videos to keep building financial systems that actually work for your business. Questions? Drop them in the comments or reach out to us directly at connect@c2accounting.net. We read these. Links to our websites and socials are in the description below if you want to check out some of our other content. Now, see you in the next video. Don't forget, keep learning so that you can be rooted in wisdom and grow with care.